Hey guys, welcome back to Startup Center. Today we are going to be discussing what happened with Blackrock's ETF application for Bitcoin because it was denied. And in this video, we're going to be exploring what happened and what are the repercussions for you and I as investors in Bitcoin. So without further ado, let's get started. Okay guys, so if you have been watching this channel, you already know that there are a ton of companies trying to apply, and especially funds are trying to apply for an ETF for spot Bitcoin. This means that they are trying to help people who are not crypto savvy get into Bitcoin. Now, these ETFs have plus and minus or pros and cons, and I'm going to link a video up there if you want to know more about this. But in this video, we're going to be centering around what's going on because we all thought that the Securities Exchange Commission, Gary Gensler, would allow Bitcoin, would allow BlackRock to start trading their Bitcoin ETF on the stock exchange. However, it was denied. Now, this was not a full denial. So we're going to be looking at the browser, checking what they answered and what's going to be happening next. So let's go to the browser and explore. So here we are. This is from CoinDesk, and basically the title of this video is of this website is Bitcoin tumbles. Of course, it tumbled around that $1,000 per Bitcoin, but now it has gone up a little bit. So Bitcoin tumbles on report of the Securities Exchange Commission saying that the spot BTC ETF filings are inadequate. So they said, no, we're not going to go and allow this until you correct a number of things. Now, we all know Gary Gensler for being kind of not telling the entirety of the things companies are doing wrong and trying to play a guesswork game. But I don't think that's going to be happening with BlackRock because non-officially, BlackRock, the guys at BlackRock are the bosses of many people in the US government and other companies, indirectly and unofficially, including potentially this guy at the SEC. So I think they're just playing theater to make people think that it was not so easy. But let's see, because they not only denied BlackRock, but they also denied Fidelity and others from being allowed to trade their ETFs on the stock exchange. So let's read on. The U.S. Securities and Exchange Commission ETF said recent filings to launch a spot Bitcoin ETF are inadequate, reported the Wall Street Journal on Friday morning. So today is Friday. It's Friday afternoon. The news sent the price of Bitcoin plunging by $1,000 or more than 3% in the space of a few minutes. Now, guys, Bitcoin has recovered. It's around 30,600 at the time of recording this video. So I think it's no major harm done, but we're going to explore in a moment what happens if they're not approved in a short term. So, okay, let's keep reading. According to the story, the SEC has informed NASDAQ and the Chicago CBOE exchanges that filed this. Well, this is not well redacted, but the paperwork, including BlackRock and Fidelity, they are insufficiently clear and comprehensive. So, as you and I know, and from that video I mentioned, BlackRock has only been denied one ETF out of around 570 by the SEC. So this, again, guys, this is not a full denial. This is just theater saying, yeah, you're not ready, guys. Come back next week. Now, another thing has happened. ARK by Cathie Wood, they changed their application to basically it's a copy and paste of BlackRock's, and they were in line before BlackRock. So had Gary Gensler approved BlackRock's ETF, then he would have to approve ARK Investments ETF before BlackRock because they are in line before them. So by virtue of them saying your application is not correct, BlackRock, they basically also denying ARK Investments ETF. Now, who's going to get the insider information on what to correct? You guessed it, right, guys? BlackRock. At issue, the story continued, is that the filings didn't have enough detail with respect to the surveillance sharing agreements. Now, this means that these ETFs have to have a partnership with a custody company that basically has a big market share, so big that the price cannot be manipulated. If I understand well, BlackRock was intending to use Coinbase, but here's the trick, guys. The SEC wants this custodian to be registered with the Securities Exchange Commission. And what has been happening with Coinbase? Well, they are a battle with the SEC, with Gary Gensler. So potentially they will not be allowed to custody Bitcoin for BlackRock and all these other ETFs. So what other custodian is greenlit in the US to custody Bitcoin? Well, so far nobody, but I would bet my hat that it is Fidelity. They are creating their own exchange, and I would bet my hat that they're going to be approved as custodians because, again, Gary Gensler is at battle with the Bitcoin boys. So that includes Coinbase, that includes Binance, and everyone who started in this industry before Wall Street. So there's a number of reasons why I think this is happening. One of them is they don't want Coinbase to benefit from this, and they want to benefit one of their friends. So let's continue. The SEC said in a previous ETF rejection order that the sponsor of a Bitcoin trust would have to enter a surveillance sharing agreement with a regulated market of significant size. Again, guys, this is not your small exchange. Potentially Kraken is out of the picture because it's not that big. Would think Binance and Coinbase would be good options. But again, as you and I know, Gary Gensler is in war with the traditional crypto industry. So they will not be allowed to custody Bitcoin for BlackRock and any other ETF, at least not now. A market of significant size is one where anyone trying to manipulate the price of an exchange or ETF has to trade on the same market exchange traded product is based on. So basically, it's a big market. So what is a big exchange? Well, NASDAQ is a big exchange. That's huge. But in terms of crypto, again, guys, this would mean someone the size of potentially Coinbase or even Binance. Again, at present, no federal regulator has oversight of spot Bitcoin markets. As state of affairs, the Commodity Futures Trading Commission, or CFTC, has lobbied to change for years. So this is another thing. The CFTC and the SEC are in fight to trying to be given the authority to rule over spot ETF for Bitcoin. So far, there's no conclusion. Just to finish this, BlackRock's spot ETF made basically the price of Bitcoin go from $26,000 to $31,000. And this means if we apply the same logic that by them being rejected this ETF application, and again, guys, it's not a full rejection, then we should see, if we thought that way, we should think that the price will go back to $26,000. Now, here's the thing, guys. One, on the technical, the TA side, I don't see that happening soon because $30,000 is a strong support, is a strong floor for the price of Bitcoin. So in order for it to break that floor, something really bad would have to happen. And I don't think a temporary delay in the approval would justify the price going down. Now, if this takes a while to be approved, then here are two scenarios. The first scenario is, let's say it takes one more month for the SEC to tell BlackRock, now you have a green light. And then again, guys, as long as Cathie Wood and ARK Investments copy the strategy of BlackRock, then they would have to be approved first before BlackRock. But again, let's imagine for a moment that it would take a month for their ETF to be approved. If that happens and the price of Bitcoin has oscillated around $30,000, then the moment that they are approved, probably we're going to be seeing another rise in the price of Bitcoin. potentially to between $32,000 and $34,000. If it takes a lot longer, that might not consolidate that fast. But again, guys, remember that we are fast approaching the Bitcoin halving. So the closer we get there, and this number of facts that we also discussed in that video over there about the price of Bitcoin, they will happen all at the same time or in a short period of time, the stronger the push upwards of the price of Bitcoin is. So I believe that we will get to an all-time high more or less around the time of the Bitcoin halving, if not a little earlier. So potentially we could get to around $70,000 per Bitcoin if this amount of things happen in a short time frame. Last but not least, I want to mention something that I missed in those videos I just mentioned, that the fact that BlackRock and all these big, like Vanguard and all these big investment funds are getting into Bitcoin with the ETF product, it could mean that they will be able to manipulate the price of Bitcoin in a harder way than they have been doing before. Why? Well, this is what they have been doing with the price of gold. And as you know, or potentially know, the price of gold has become stagnant. So I think it was JP Morgan who was just accused of manipulating the price of gold for the past 13 years. And they were fined with almost $1 billion. Now, this was a lot of money, but they made a lot more money by manipulating the price. And they did it through ETFs. So there is a risk with this ETF products of these big companies manipulating those prices. And I will not go deep into how they would do that. Maybe we'll do another video about that. But suffice to say that if they are able to do so, then we need to be vigilant. Hopefully, their Bitcoin will be stored in a wallet that we can check. Right, because the problem with gold and that ETF, it's not entirely backed by gold. And some believe that there is one piece of gold for every 10 pieces of electronic gold or paper gold. So this can be avoided in crypto if we are able to look into those wallets held by these ETFs and see how many Bitcoins they have, and if those match the amount of Bitcoin they are selling on the stock exchanges. So we'll keep an eye on that. I hope this was useful to you guys. If it was, don't forget to like this video and subscribe to this channel for more information about Bitcoin and about how to grow your money, including crypto. See you in the next video. Bye-bye now.